Namaskar. This is Akhilesh Bhargava. Welcome to Tit-Bits on Business and Finance with me. In a recent interview, the managing director and CEO of Hindustan Unilever said that India must ensure that it does not get trapped by stagflation, which is a situation of high inflation, high unemployment, low growth, and thus stagnant demand in the nation's economy. He said that inflation is certainly having an impact on consumption in India. He therefore urged the government to speed up the front loading of the capital expenditure of 7.5 lakh crores, which it had earmarked in the 2022 budget, which he says must be spent now in order to support recovery and growth in the Indian economy. The HUL MD said that even before the Russia-Ukraine conflict, private consumption and private capex, which are both closely interlinked, needed improvement in India. Until that happens, which is private consumption and private capex go up, he says that it is the government that will have to be the prime mover of fueling growth in the economy, and hence it must spend now. Since the monetary policy will have to be suitably fine-tuned and modified, he points out that it will be a tight rope walk for the Reserve Bank of India, which will have to ensure that there is sufficient liquidity in the system such that growth is not constrained and at the same time there is no runaway inflation in the country. In the meanwhile, HUL, which is a market leader in soaps and detergents and whose performance is considered to be a proxy for the broader consumer sentiment in India, this company posted a 10% growth in sales driven by a rise in sale prices and not because of an increase in consumption of volumes or purchase of volumes by the consumer. Volumes remain flat for HUL. That shows why the broader FMCG industry sales expanded by just 1% and its sales volumes actually fell by 8%, indicating the sharp uptick in prices of products and the downfall in actual consumption volumes of the end consumer. The HUL CEO pointed out that consumers are reducing the volume of consumption, or that in many cases they opt for low unit packs due to the big jump in prices. And the jump in prices is because the prices of crude and palm oil, which are key ingredients for the manufacture of soaps, detergents, shampoos, etc., have shot up by 60% as compared to their prices a year ago. And the net inflation for materials has grown by over 4 times in the past 2 years. The bottom line is that consumer expenditure, even on basic necessities like soaps, detergents, etc., has been falling, reflecting the challenges and the uncertainty that the Indian economy faces today. Despite the worrisome scenario of rising and elevated inflation, which refuses to dip, the specter of the depleted household incomes and falling growth, not just in India but even worldwide, despite that comes the welcome news that Gst collections, which are directly linked to the levels of spending and consumption in the economy, they have shot up to an all-time record monthly figure of rupees 1.68 lakh crores in April 2022. It's a record so far, and it is the first time since 2017, when GST was introduced in India, that the monthly GST collections in India crossed the figure of 1.5 lakh crores. The GST collection of April is on account of the transaction and spending which take place in the month of March, which tends to be higher because of the year-end adjustments and sales that take place. In response to this record monthly collection of GST, an elated finance minister tweeted to say that she sincerely recognizes and appreciates the efforts made by each and every state government in improving the GST revenue collection. The finance minister said that India's economic recovery is sure to be on a sustained path due to all our efforts. Yet another minister tweeted that such record GST collections are clear proof, according to him, that the economy is firing on all cylinders, which is actually not the fact. The Finance Ministry attributed the robust GST mop-up to the tightened compliance measures and a crackdown on the GST evaders and fake bills that has ensued. The Finance Ministry said that it is a result of various measures taken by the tax administration to nudge taxpayers to file timely returns and to make compliance easier and smoother, and also the strict enforcement action against the errant taxpayers who are identified on the basis of data analytics and artificial intelligence, that the GST collections have touched this kind of a record figure in a single month. For all those having an eye on statistics and data, the comparative figures for April 2022 are worth having a look at. The GST collections in April 2022 touched rupees 1.68 lakh crores as against rupees 1.42 lakh crores in March, which is an increase of 26,000 crores in a single month on a month-to-month basis. On a year-on-year basis, the GST collections in April were 20% higher as compared to the GST collections in April last, which is April 2021. The GST revenues because of imports went up by 30%, while those due to domestic transactions recorded a lower growth rate of 17%. So the increase because of import revenue was much higher. Further, the e-way bills touched a record figure of 77 million in March 2022 as against 68 million in February 2022, showing a growth of 13% and an increased economic activity. India recorded the highest GST collection of 57,847 crore rupees on a single day on 20th of April 2022 against 9.85 lakh transactions. And the highest collection of GST in a single hour in India was 8,000 crores between 4 to 5 p.m. on 20th April 2022. In terms of filing and compliance, 84.7% of the registered GST payers filed their Form GSTR 3B in April this year, as against 78.3% who did it last year. And finally, the average monthly GST collection for the quarter ended March 22 was 1.38 lakh crores, and it is now expected to exceed 1.42 lakh crores as an average for the June quarter. It is certainly good that GST collections in India have been on the rise despite the economic uncertainty and sluggishness and the ongoing war in Ukraine. But the jump in collections is not because the Indian economy is firing on all cylinders, as a sycophant central minister claims and wants us to believe. And nor is it because the Indian consumer is spending more and is thus adding to the government coffers. It is primarily due to the tightened compliance measures and a crackdown on GST evaders, as the Finance Ministry claims. And it is also due to the impact of inflation, which the Finance Ministry unsurprisingly chooses to be silent about. Inflation has also caused the GST collection to go up. The larger picture that emerges out of such data and trends is worth a discussion, because that shows the trajectory of GST collections in the coming months and quarters. The first one, the government has indeed put in place a very robust, capable and extensive GST system in place, aided by digitization, artificial intelligence, data analytics and automatic data sharing. It is this technology which is driving the GST administration, making it easy to spot evaders, ensure compliance, levy heavy interest and penalty, and finally ensure recovery. And with such a system and software in place and GST evasion not yet completely weeded out of the country, it will never be so, the favorable impact of such systems on GST collections will continue for some time. Every transaction that you execute gets captured and reported, and so is the GST due to the government, which its robust systems then ensure recovery from you. The second issue is that the success of GST collections is thus more due to technology and not really due to a good law. And with such proven and formidable systems and surveillance in place, it is time for the government to simplify the law and make it taxpayer friendly, less complicated, and to also rationalize the GST slabs and the tax rates. The third, the surge in GST collections in April is thus not truly driven by economic growth or recovery, but it is due to a tightened administration aided by robust governance systems and also because of inflation. The fourth, it must be noted that due to year-end targets, budgets and adjustments, the sales for the month of March tend to be higher every year, and that impact on the GST collections is always material, and it cannot be ruled out in this case also. Moreover, due to the Ukraine war, there has been a surge in global commodity prices and import valuations, which reflects the 30% surge in import revenues in GST as reported in April. This to us is a temporary factor and it will reduce as the war subsides and comes to an end. The next one, that is also the case with the impact of inflation on GST collections. Inflation may be collection positive in terms of collection numbers, but it is growth negative, and it is hoped that it withers away at the earliest. The spurt in collections due to such tax evasion deterrence too will peak when overall compliance has become optimal in the country, and collections will then stabilize towards stable normal in India. That factor also will come in. The number of taxpayers in India has gone up due to such tightened and heightened GST surveillance and collection, and that is good for the overall economy and the growth of the nation. And finally, better tax collections certainly mean a better state of government finances and treasury with the ability to spend to support growth. So, it's good that GST collections have gone up, but let not the reasons for the collection of numbers going up delude you. They have gone up more because of the fact that the government's machinery is getting better and better, smarter and smarter, and they have not really gone up because the economy is firing in all cylinders, as the minister claims. It has not gone up because of growth and recovery. It's just that the collection mechanisms have become better, aided by inflation. This is Akhilesh Bhargava signing off till we meet again. Namaskar.